Shares of Emera under pressure today after the Halifax-based energy company posted profit that came in below expectations. Still, its CEO says the quarter reflects steady execution. Let's go to Scott Balfour, who's President and CEO of Emera. Thanks for joining us today.
Happy to be here. Thank you.
Adjusted earnings per share down from a year ago. What were the biggest pressures for you this quarter?
Yeah, we had some higher interest costs as we financed some maturing debt a little bit early to de-risk that, and some impact from foreign exchange. But I really think the more important story here, Marilla, is that our year-to-date results are really strong. We had an exceptionally strong first quarter this year, and we've reaffirmed early this morning with our shareholders that we're on track to actually exceed our 5 to 7% EPS guidance this year, and we remain on track to achieve our 5 to 7% rate, 5 to 7% EPS growth guidance through to 2030.
Okay, we'll talk about that in just a moment. I'm wondering if the pressures that you faced, interest rates, et cetera, will affect the rest of the year.
No, we completed that refinancing in June, so we did raise a little bit of debt a little bit early in order to de-risk refinancing really that related to an acquisition 10 years ago. With that maturing debt and foreign exchange, of course, will continue to have some fluctuations, but we're actually sitting in pretty good shape right now.
Florida Electric did well for you. What happened there?
Well, really, we had some positive impact from weather, and of course, the story in Florida continues to be strong as we continue to serve a growing number of customers. The state of Florida continues to see strong economic development, good population growth. Notably, I'd say the state of Florida, the Florida Chamber of Commerce recently announced that if Florida was its own country, it would be the 14th largest economy in the world, bigger than Mexico and Australia. And so we're fortunate enough to have two utilities that operate in the state of Florida, and we're seeing good performance with both.
The New Mexico gas sale is done. That brings in, I believe, $650 to $700 million. What will that money be allocated towards?
Yeah, the completion of this sale, which we expect now that we have regulatory approval last week, the regulatory commission in New Mexico approved this sale, and so we expect to close the sale sometime this month, and those funds really will provide us with more financial flexibility, allow us to continue to invest in our higher growth, higher returning operations across our portfolio, in particular where we're seeing so much growth in Florida.
Okay, let's talk about infrastructure. That's part of your investment, $1.7 billion so far this year, but twice that for the second half of the year. So what does that involve, and would you say you're on budget?
Yes, we are. Yeah, so you're right. We're on track for about a $4 billion capital investment program this year, and on track for a $20 billion capital investment program over the next 5 years, which is 7 to 8%, in the range of 7 to 8% rate-based growth CAGR across our portfolio. And a lot of that is focused on reliability investments, on serving new customers, on replacing older infrastructure, and on either investing in renewables or supporting new renewables on the system. So those would be all the major factors that are part of that $4 billion this year and $20 billion through 2030.
Let me get you on the concept and the discussion around maritime provinces having a unified power operator. I know that has been raised. What's your take on that?
Yeah, truthfully, I think it's a good idea. In the Maritimes here in Atlantic Canada, we have smaller systems with smaller number of customers with diverse resources, and so to the extent that there can be some cooperation to share and move around that energy and think about the planning for that energy on a more regional basis, I think that would be good for customers. And so I'm encouraged that the federal government and the provinces have started to consider this as exploring that as an opportunity to serve customers in future. I think it's a good idea.
Scott, I've got about a minute left with you. We talk about your earnings per share and a bit of a miss there, but you still say you're going to have share growth 5 to 7%. What gives you that confidence?
Well, really, continuing to invest in the capital. It's a strong performance year to date that continues to provide that confidence as well, and the growth that we're seeing across the portfolio. I mean, really, Marilla, what we're seeing right now is after a strategy reset a few years ago, we're really seeing the business execute with real discipline, and we're seeing that in the results of a strengthened balance sheet, of strong capital programs in front of us, strong earnings growth. As I say, we're expected to exceed our 5 to 7% growth this year. And truthfully, we continue to see compelling growth opportunities across the portfolio. And I describe our portfolio as premium, particularly with the strength and the degree of our operations in Florida, which today represents about 70% of our business.
Scott, got to leave it there. I'm sorry, I'm out of time. Thank you for your time.